The market looked like it was unstoppable until we hit this last week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on the replay or on YouTube itself and you haven't done so already, make sure you hit that like and subscribe button. Click the little bell icon next to it because you're not going to want to miss a single webinar here in the next couple weeks because, man, we have had some action these last couple days. So, we had obviously the week prior to this, we had a short trading week going into the Easter weekend with Good Friday being, the market was closed. So, we just kind of chopped around a little bit, honestly. And then, we kind of started Monday, a little bit of red, nothing too big. And then overnight, huge gap down here in the S&P 500. Little bit of gains, going into Wednesday, but Thursday after Powell's talk about inflation and what the plans for the Feds are, the market flipped completely red with a huge red day, over 1% down. A massive engulfing, red candle here. And then on Friday, we had a huge dip buying fest, for lack of a better term. Everybody was jumping back in. Obviously there's a lot of commodities movements, things like that. We'll get into that here in a little bit, but man, this has been a very tricky market, especially this last week. We basically go red, a little green, red, huge, a little, okay, I won't say Friday was a little green. That was a pretty big move, over a percentage move back towards the upside here for the S&P 500. But man, when Powell started talking, the market just took an absolute dump. And, basically he said that, there's a chance that maybe there won't be rate cuts until September now. Big surprise, huh? We keep having hot inflation prints and they just kind of keep delaying those rate cuts. It's like, oh, it's not going to be June. Now it's going to be September. And maybe next time, well, maybe it won't be September. Maybe it'll be October or November. And we'll just kind of keep moving that goalpost back a little bit, every single meeting. So we're going to have to see if that trend continues. But I mean, let's be honest, can they really cut rates if inflation and the CPI keeps going up? I don't see a way in any logical sense that you can justify making rate cuts in that type of an economic environment. So, there was, a lot of chop, a lot of movement this week, up and down. It's been incredibly tricky to trade, but we may be seeing some weakness here in the S&P 500. Perhaps investors are finally waking up to the fact that, oh yeah, maybe rate cuts are a little bit premature at this time. Let's take a look down at the breakdown for the S&P 500, and we have somebody new in the top spot, and that, where's, okay, so tech is just hiding there. Sorry about that. I wanted to check that real quick. We have a new person here in the top spot. Energy is the new top dog. Look at this parabolic move starting here from about the 26th of March, going almost straight up. Energy making huge gains over these last couple weeks. We'll take a look at that here in a minute. Obviously, we've got communications right behind it, just by a little bit over a percent behind it. But tech taking a bit of a slide this week. Tech and financials doing pretty good, both outperforming the S&P 500, but tech used to be the top dog. Not anymore. We see this huge move in energy is really what is propelling the market up. But even on Thursday, when the market was down over a percent, energy barely moved at all. It basically stayed stagnant, which I think is a pretty interesting, data point to keep an eye on here. And it just kept going up on Friday on that big rally Friday. As you can see, we've got some of the other indices underperforming here. Obviously, we've got healthcare, consumer staples, utility, consumer discretionary, and the one at the bottom of the barrel below the zero line is real estate, down 5% on the year. That's rough. Yeah, energy, the real big gainer this week and the big mover, and I'll show you why right here, because look at the price of oil. We are going up. Now, we were having kind of this slow move towards the upside. We were in this nice little uptrend with oil, but man, basically right here, the 24th, we talked about that earlier. That was the start. And, we have just gone, I won't say straight up, but it's definitely moving up at a very high clip. Looks like light crude closed at 86.91 per barrel on Friday. Now, what is not moving at a good clip, but actually is parabolic, is gold. Look at this move in gold. Now, obviously, we were looking at this prior to the week, before the Easter weekend, on our webinar, and we were talking about gold consolidating here, and it could really pick two directions at that point. If it consolidated and it held, we could make another leg up. If it didn't hold and it broke down, we could start seeing some selling going on. Well, it held and has continued making an absolutely parabolic move. Gold now closed, let's see, on Friday at $2,329.57 per ounce in USD. So gold going absolutely crazy here. There is a lot of central bank purchasing of gold right now. A lot of places are hoarding gold. You can come up with your own theories and, conspiracy theories as to why that is, but the truth is there is a lot of big players right now in gold making a lot of big moves. There's a lot of buying pressure pushing this market up. And given how large the gold market is, that means there is a whole lot of buying going on. So make from that what you will, but that is what we are seeing as far as the price of gold is concerned. Now let's take a look here at the bond yields. And one thing you should probably start to notice is these bond yields starting to tick back towards the upside. Now, obviously, we had Powell talk on Thursday and said, okay, probably maybe might want to consider maybe in some world that we may cut rates on September-ish, maybe projection. Who knows? But we start seeing the bonds, the bond market start to price in the fact that maybe we aren't going to see rate cuts as soon as we thought. Starting to really tick up nicely on Friday with that move up, while the dollar really kind of is just stagnating at this point. We're really just kind of stuck in this channel here, right around between 104 and, about 102 as far as the valuation of the dollar. So not a lot of movement there as of late, but yeah, compared to the price of gold, which I think is interesting, we are not seeing a how should I say, a one-to-one relationship with, the strength of the dollar either going up or going down impacting the price of gold, which is we're measuring in US dollars. So one would think that if the dollar were getting weaker, it would take more dollars to purchase gold, but yet gold is going up, which you would think would mean that the price was the strength of the dollar was going down, but it's not. It's really kind of holding steady here. So that is something to keep an eye on, as the dollar maintains its value. But gold just goes absolutely nuts. Now let's go ahead and take a look here at the big economic data points this week, and you can kind of see and probably know what I'm already going to say. Wednesday is the day. Now, of course, if you do live in the United States, you should be aware that we are having a solar eclipse on Monday. I am actually in the path of totality, so I'm going to be very excited to see that. Hopefully, the clouds do not, form as the sun begins to get blocked. But, so nothing on Monday, nothing on Tuesday, but Wednesday is the day. Look at all this. We've got inflation rates, the core inflation rate, the FOMC minutes. Oh, it is a big, big day for the market, and we are going to see a lot of action on this data. Looks like I may have gotten my time wrong. I believe that should be 8:30 if I'm not mistaken, so I do apologize for that. Just add an hour to these numbers for this week, and next time I'll get that fixed. Obviously, we got the producer price index here on Thursday, not as big as these right here. And yeah, Michigan consumer sentiment, nobody cares about that. Sorry, Michigan consumer sentiment. What I think is interesting here is it looks like they're actually expecting core inflation to drop 0.1%, month on month. And same thing here for year on year. While the last two CPI prints have come in hot, 0.1% higher for the last two CPI prints. They're like, oh, yeah, we're going to predict that it's going down. Sure. I don't know what they've got over there, but man, I sure could take some of that. That seems good. I'm not going to say that these numbers are wrong, but man, it feels a little fishy to me. That's all I'm going to say. Also, here we're seeing the producer price index. Looks like they're saying it's going to drop almost, at least 0.2% from the previous read on that. So that's a pretty aggressive number, if you ask me. We'll have to see if that actually happens or if that's just a lot of hot air to make people feel good about things. But yeah, a lot of craziness going on in the market this week. A lot of very random price action. That's really the best way I can describe it. It has, except for Thursday, which made a lot of sense when Powell was kind of waffling on the interest rate cut issue. It's not surprising that we saw that big pullback because everybody freaked out because the market had priced in rate cuts earlier in the year, and now they're saying, well, maybe it might be a little bit later. It's kind of like your parents back in the day saying, well, I'm going to give you your allowance, but it's just going to be a little bit later this week. And you had already mentally spent that allowance in your head and you just started crying because the ice cream truck had come and gone and you didn't have your allowance and you did not get that dreamsicle that you always wanted. You just had to wait for next week. So at this point, with my little analogies over, I'd like to go ahead and open it up to our members here who are live on Elite. To go ahead and post any questions if you'd like me to take a look at anything. But I think this week is going to be very telling for the market, in my opinion, especially on Wednesday with all the economic data coming out there for the inflation as well as the core inflation. That's going to be big. I think that's going to definitely be a major catalyst going into Wednesday. I think there's going to be, in my opinion, a bit of hesitation in the market. I think that that's fair after this huge selling and huge buying candle. I would not be too surprised if the market consolidates a little bit going into that Wednesday report rather. And then I think people will make their decision after that. But that's just my opinion. The market can always prove me wrong. It has done so many times before. But yeah, right now we seem to be kind of stuttering a little bit. We kind of, took that shot to the gut and we're like, okay, wait a minute here. Maybe things aren't as, sunshine, rainbows, and unicorns as we thought they were. Definitely something that we're going to be keeping an eye on this week. That economic data is going to be a big telling point for how I think the rest of the week will pan out. Obviously, if investors view the data as good, see a lot of buying pressure after that. Conversely, especially, if the FOMC minutes are, rather hawkish, then we could be seeing some selling going on. So it all depends on how that data is digested by the market and, kind of how it spits it back out, whether like, okay, this data is good. Inflation's not as bad as we thought. It's still bad, but it's not as bad. So we're going to buy risk off to the moon, LFG, or it could be like, okay, maybe things actually are as bad as they're saying they are. But, it's a coin flip. The market can go either direction at this point. But so I think the most important thing with that being in mind is to stay very cautious at this point. Don't let your green trades go red. That's great advice for anybody. But it bears repeating because, when you have a bull run like this, and you could basically just pick a stock and be like, oh, yeah, it's going up, going to the moon. Let's go, diamond hand, whatever you want to call it. And then you have kind of this hesitation here, this stutter step, like, oh, okay, wait a minute. Maybe this was a little too much. So, if that's the case and we start seeing some more profit taking and, people dumping their positions, obviously that's going to affect the market negatively, depending on which side of the trade you're on. But, it bears repeating, like I said, if you have trades that are in the green, do make sure you are putting on a profit stop. That's a really good way to ensure that you can lock in profits on your green positions without having to sit there and watch it all the time, which is great because I don't know about you, but I've got a day job. I can't just sit around and watch the stock market tick every minute of every day. It would be cool if I could, but sadly, not the case. So, if that's you and you've got some green positions right now, can't hurt to lock it in just in case. But again, I'm not going to tell you what to do with your money. It's your decision. You need to make the best decision for you and your risk profile, of course, and not listen to just some dude on the internet talking about the stock market. So it's just my opinion. I hope it helped. I'm not seeing any questions right now, so I want to thank all of our elite members who came out to this one live. Really appreciate each and every one of you. You all are awesome. And for all the rest of you, again, if you wouldn't mind dropping a like and subscribe on your way out the door, it's greatly appreciated. And we'll see you in the market on Monday.